Welcome to the Thursday edition of the Tech Stocks Daily Podcast, where today's episode is packed with buzzworthy happenings in the tech universe. Buckle up as we dive into Microsoft's adventurous day on the NASDAQ, with share dips reflecting jarring trade tensions and its strategic pause on a billion-dollar investment. We'll explore how SPS Commerce stays a growth powerhouse with big financial news looming and anticipate fireworks at their upcoming reveal. Finally, enter the courtroom with AppLovin as lawsuit drama thickens, alleging sneaky ad practices and stirring investor unrest. Stay tuned for a whirlwind journey through Techland's hottest stories. Microsoft, the tech giant that's been hitting the headlines more than a celebrity in a tabloid. If today's news had a theme, it was definitely all about a series of moves involving Microsoft that paints a picture of a giant both in transition and economic strategies. Firstly, let's delve into the stock market jitters. Microsoft shares hit a bit of a skid today, down around 3.2% by mid-afternoon. The backdrop? A bubbling trade war between the U.S. and China. President Donald Trump decided to crank up the tariffs on Chinese imports to a jaw-dropping 145%, which sent shockwaves through the markets. Even though tariffs on other countries were quelled at 10% yesterday, the unpredictability of these pricing wars did little to soothe investor nerves. Naturally, this prompted fears that economic turmoil could force big tech names like Microsoft to rein in their investment shticks. Speaking of reeling back, Microsoft made headlines for shelving its ambitious $1 billion data center in Ohio, part of a larger theme where it's hitting the pause button on projects from Europe to Australia. The strategic pullout indicates that someone's at Redmond HQ playing a fiscal game of chess. The company is being a stickler for its investment strategy, choosing smart pacing over hasty demolishing, especially with concerns such as semiconductor tariffs and AI overcapacity looming around. Now, how about Microsoft's abrupt departure from campus and beyond? It's not a new college kid tale, but rather a case of the tech giant ruffling feathers halfway across the globe. Microsoft abruptly decided to terminate 365 services for Sun Yat-sen University and BGI Group in China, stranding academia and business folks without a virtual umbrella. The uni gave a heartfelt memo asking folks to pack their digital bags, and pronto. Could this be Microsoft flexing its muscle amidst a technological decoupling from China, or is there more than meets the eye? Unfortunately, the reason remains as under wraps as Secret 11 herbs and spices. With the American and Chinese governments in a commercial tango of their own, these moves could very well be tech collateral caught in geopolitical crossfire. Also, Microsoft's previous job cuts are raising eyebrows, pushing the narrative that the corporate titan might be girding for an even rockier ride. All this cloud underlining day-to-day happenings, but as the tech doings go, no one else quite harnesses storytelling in AI, cloud computing, and enterprise shelves like Microsoft does. Its strategy, albeit in flux today, signals it remains planted firmly by its play to thrive amidst the changing winds. In every sector tarnished by tariffs and trades, Microsoft remains a luminary, focal on leveraging these tides to sail towards greater heights. Thus, no matter the looming uncertainties, we're reminded that like a Windows update, Microsoft can't help but make an appearance, projected to move and shift in directions we'd least expect. All right, tech lovers, let's talk about what's buzzing with SPS Commerce today. Gut check time. Is your retail business struggling with the complexities of supply chain management? Are you drowning in a digital sea of inefficiencies? Well, pull out a life vest because SPS Commerce is making waves. Today, SPS Commerce, a juggernaut in retail supply chain cloud services, made headlines with the announcement of their upcoming financial results. Mark your calendars for April 24th, 2025. Yes, folks, that's when SPS will reveal their financial performance for the first quarter ending March 31st, 2025. This event is generating quite the buzz. For a company that has clocked a mind-blowing 96 consecutive quarters of revenue growth, it's akin to waiting for the season finale of your favorite Netflix show. SPS Commerce plans to share all the juicy details via a conference call, scheduled for 3:30 p.m. Central Time. Big shout out to everyone tuning in from the Eastern Time Zone at 4:30 p.m. Grab your popcorn because they'll delve into the nitty-gritty of financial towers, fueled by those innovative cloud technologies and top-tier service. If you're curious as a cat, dial 1-833-816-1382 if you're in the U.S., or 1-412-317-0475 if you're dialing in from elsewhere. Definitely join the fun and ask to hop on the SPS Commerce conference call, because who doesn't love being in the know? What makes SPS Commerce stand out among the retail crowd isn't simply their impressive financial track record, it's their genuine impact on the market. Over 45,000 recurring revenue customers rely on their cloud network for smoother-than-butter logistics. From retail to grocery, distribution to manufacturing, SPS becomes every business's best friend, optimizing supply chain operations with an ethos built on data-driven partnerships and a laser focus on service excellence. Minneapolis might be steely cold in the winters, but headquartered there, SPS Commerce has a warm customer centricity that's bringing heat to retail supply chains around the globe. They're certainly dishing out infinite retail power, as their registered trademarks assert, and such a claim deserves witnessing. They're not just a tagline, they walk the talk with tangible results. Today isn't just a notification for SPS's upcoming financial confabulation. It's also a day to recognize how they've sustained such monumental growth with their might in digital and retail solutions. As we approach the big reveal, every stakeholder connected to NASDAQ SPSC seems to be on tenterhooks. For fans, competitors, and investors alike, the suspense is building. Once again, be sure to catch that live webcast of the call, available on their investor relations webpage. Turn up the volume and catch up on the stellar performance update with the well-oiled network of experts from SPS. That's today's encapsulation of all things SPS Commerce, cloud, supply chains, and financial enlightenment awaiting all fans and acolytes of tech-driven retail magic on the horizon. All right, tech enthusiasts, grab your popcorn because AppLovin's having a bit of a drama moment today on the NASDAQ stage. Yes, indeed, it's not all techie innovations and happy stock graphs. Sometimes it gets real, like an episode of a legal thriller. Our focus is on these lawsuits that have got everyone talking. So what gives with AppLovin? To set the scene, let's introduce the main players. AppLovin Corporation, known for its digital ad platform, is facing some hefty allegations. First up, we've got Levi and Korsinski LLP serving the tea on a class action securities lawsuit. They're gunning for AppLovin, claiming that investors were teaspooned a cocktail of misleading information. The drama unfolds around allegations that the company not only hyped its financial growth in the launch of the much-hailed Axon 2.0 ad platform, but someone might have thrown a little extra spice in there. Allegedly, AppLovin strained reality by reverse engineering and misusing advertising data from meta platforms to inflate their click-through rates and app downloads. They're accused of using some sneaky techniques like shadow downloading and rogue clicking ads. Okay, we're waving a big red flag in the audience right here. Wait, hold on to your virtual hats. News gets more intense as Berger Montague joins the legal fray with their own twist on the story. This isn't just another lawyer nagging about some missed fine print. The accusations from Berger Montague repeat the serious concerns about inflated numbers and overhyped tech advancements, shared by analysts from Fuzzy Panda to Culper Research. It's like a tech soap opera, where numbers, advertisements, and algorithms play leading roles, and truth is the underdog trying to squeak through. On the money side, as expected, there was a plot twist, a drop twist rather. AppLovin's share price took a cliff dive from $377.06 to $330 per share on Revelation Day, down $46.06, which shook up the corporate and investor hallways. So what's next on this cliffhanger journey? Shareholders with battered wallets have until May 5th, 2025 to throw their lawsuit hats in the ring as potential lead plaintiffs. No lead star auditions or lawyer love stories needed. Being a class member alone can let you see a piece of that legal compensation pie. Now over to you, our savvy viewers. What do you make of these tech giants potentially playing algorithmic hide-and-seek? Should consequences be severe if these allegations hold true? Or is all fair in love and tech? Share your thoughts in the comments. We'd love to hear your take on whether AppLovin deserves a slap on the wrist or a chance for redemption. Let the discussion begin. All right, let's dive into Microsoft's current situation and wrap our heads around whether you should hit that buy button, hold tight, or make like a chicken crossing the road and sell. So, Microsoft shares experienced a bit of a downturn today, with a slide of around 3.2%. This dip is largely because of economic jitters sparked by escalating trade tensions between the U.S. and China. Tariffs shooting up to a radical 145% on Chinese imports is like slapping a panic button in the investor's universe. At first glance, you might think it's time to walk away, but hang on and let's take a deeper look. Despite the setback on the shares, Microsoft's strategic maneuvering, such as shelving a $1 billion data center project, shows they're playing the long game of cautious investment. They're opting for strategic growth over reckless expansion amidst uncertain market conditions, including semiconductor tariffs. So probably not as action-packed as getting your popcorn to watch a fireworks show, but it's the smart economical move that projects a duct tape and WD-40 strength. Then there's the bold move of halting 365 services for Chinese entities like Sun Yat-sen University. It hints at a possibly bullish approach to major market shifts or a tactical recede as part of a grand strategy. Yes, Redmond loves a good mystery. Though it's a risk, it might be them strategically painting connections between geopolitics and long-term sustainability. Given all this, I'd lean towards a hold on Microsoft right now. Yes, there's a bit of financial turbulence in the air today, but Microsoft's robust strategic play employs cautious optimism. They've navigated economic storms before and consistently innovated on their enterprise solutions and technology portfolio. They're far from a risky handset, rather surfing these rocky waves deftly with agile maneuvering. But here's the big caveat: always do your own due diligence. Financial landscapes change faster than trending memes, and diving into your own stock research is the golden ticket to making smart decisions. Tech markets move quickly, and Microsoft's trajectory is complemented by numerous factors unique to each investor. So make sure to draft your own game plan, and as an informed tech enthusiast, always stay tuned in. Whoa, what a day on the NASDAQ roller coaster, right? We've seen Microsoft wrestling with tariffs like an economy ninja, a dip in their share price counterweighted by some gutsy fiscal strategies. Staying steady in the storm seems the name of the game for Redmond. Meanwhile, SPS Commerce is laying the groundwork for another groundbreaking quarters announcement, keeping the retail vibes sizzling despite wintry Minneapolis climes. And talk about a tech thriller moment with AppLovin. The drama's steeping as lawsuits bring front-row legal intrigue, shaking up the stock stage. If you cherish this tech tidbit and want to stay in the know with high-speed insights, make sure you smash that like button, hit subscribe, and pass it on to your pals who crave a daily tech fix. Let's meet again tomorrow for another whirl on the tech news ride.